Good day, traders. Welcome back. This is video 3 of the Beginner Forex series. We started to talk about a few things. We're coming from the JCP app. I mean, you can get the same information on Baby Pips. My intent here is to bring somebody who is fresh from trading right into the front door and bring you up to speed, and then give you, my strategy and how I view the markets and whatnot. Give you the information you'll need to find success rather quickly in the market. Now, how quick you become profitable will be totally up to you and your self-discipline, your self-mastery. All right. We can have all the information in the world, but if we fail to have the discipline to do what we're supposed to do, when we're supposed to do it, beat up our greed monster, subdue our greed monster, we'll fail. So let me not shy away from that. In every video, I want to mention that in some way or another. If you cannot control yourself, you will not be a successful trader. All right. If you're willing to do what it takes to gain control over yourself, to achieve self-mastery, then I'm going to give you information here that will guide you to a profitable trading career. Okay, so back in the JCP app, we're going to pick up on the types of Forex orders. I don't think we covered that. I don't think we covered that in our last video. So let me find this. Okay. When we talk about the types of orders in Forex, we have limit orders, we have stop orders, and we have market orders. Okay. Let's talk about the market order. All right. When you have your MT4 pulled up, as a matter of fact, let me just see if I can pull up my handy dandy MT4 or MT5 here. This is a current trade situation that I'm in. I'm shorting the British pound. I'm shorting GJ pretty much. All right. The JPY is getting stronger. The British pound is getting weaker. They have about 4 positions. So if I want to go in and put in a trade, I can go to GJ, hit trade, and you see where it says sell by market or buy by market. You just hit that. Of course, you adjust your lot size right here, and you place your order. Okay. And if I was to place an order, which I'm not going to do in this case, it would show up on the first screen that you saw, right? But they have limit orders, okay? Limit order is when you use, or actually you believe the market will reverse, all right? You believe price will go up to an area and then it will sell back down. So if you would put a sell limit and you place your limit order in the area that you think the market is going to go to before it starts to sell. And for a buy limit, you think the market is going to go down to an area and then buy up. So you're going to place a buy limit lower than the current price of the market. Okay. That's the example of your limit orders. All right. Let's talk about your stop orders. You can do sell stop or buy stop. All right. The stop order means you're in a trade or you see a trade idea and the price is falling and you want to set your position below where price is. You want the price as it falls to pick you up and carry you down as it falls. That would be a sell stop order. You would place a sell stop order. And for a buy stop order, it's the same concept, except for you're going to place your price above where price, place your order above where price is, and you want the market to pick you up as the price pushes higher. Okay. There are various reasons that you would do these types of orders. And I don't know, I guess, when we get into the charts in these later videos, I can show you some examples of why you may want to do a limit order. Okay, so as we look here, this is a chart illustration of what I just explained, where you have the current price. You think it's going to go down to a spot, so you want to put your buy limit below where current price is. The current price drops down, picks up your buy order, and it takes you higher. Okay, and for a sell limit order, example is the current price. You believe that the price is going to go higher before it starts to sell, so you place your sell order higher. It would be a sell limit order. Okay, and here's the example of the stop orders. All right, current price, self-explanatory. If you want to buy, set it above it. And if you want to sell, set it below it. Okay, no need to, I guess, beat this into the ground here. This is easy stuff. It happens all the time. And once we get into the actual trades, you'll get plenty of opportunity to utilize these strategies or these orders. Okay. While I'm here, I might as well talk a little bit about your MT4 and your MT5. Okay. Let's go back to the MT5. One of them is a newer app. MT5 is a little newer. It has some different features. When you look at these, everything is self-explanatory. You have your balance at the top, right? That's the first number. The equity is the second number, all right? The difference between your balance and equity is that blue number in the middle. In this case, it's blue. If I was losing, it would be red. All right, your balance is going to be what you had before you entered the trade. And as your trade is running, as you see now, the equity goes the direction that the trade goes, okay? Either you're building good equity or you're building negative equity, okay? The quotes down here, the first little deal at the first little tab at the bottom gives you your quotes, gives you all the pair that you can trade. You can see the spread. The spread is, let's talk about ASX 2000, okay? 23.19.11. The spread you can see is 190 on this pair. Okay. That's how you know whether or not you want to, get into these pair. Now, indices, CDFs, CFDs, contracts for deliveries, which is what every one of these pair that you see on the screen now, the spread is always going to be higher. Okay. I'm never trading HK 550. You see the spread is 1,460. It's just not worth it. It's not worth it. Now, when you get into the pairs down here, you see the spreads are a lot better. Okay. Again, depending on what broker you have, you may or may not, get better spreads than this. You can go to the chart here on your broker, like we're doing now. MT5, it shows what your positions are. You see all those cells with the little lines. That's my position. and you can track price this way. If you have a stop loss, you can drag it. Um, you can drag it on the app screen. Um, I don't really utilize all those features, um, but if that's the type of trader you want to be, then have at it. It's nothing wrong with it. To each his own. Um, this is like late Friday. We are about a half an hour away from market close. So I'm going to choke up, these stop losses because I only open these positions just to have something to show you guys. So, whenever it stops me out, it'll be great. I don't plan on carrying these trades over the weekend. Even though you could. And if they keep going, that's cool. I'm going to close them out anyway. But you see the trade screen. That's the middle icon. That's what we're on now. The history will show you the history of your trades, right? Um, show you all the fees, the deposits, the balance down there. In settings, you can have as many accounts as you want. Settings up here, you have all these various accounts. And you can see this is a challenge account, 5,000 challenge. It's from a company that I've never heard of. So I figured I'll do a $5,000 challenge to qualify this account and see if they actually pay. But that's all really that we have. The MT4 is the same deal. And this is a trade that I'll close out too. But you can have as many accounts on these MT4s and MT5s as you want. They look the same, except for the chart. This is what an MT4 chart looks like. I like the MT5 charts better. But to each his own, right? You have basically all the same information, all the same ability. Some brokers offer more things to trade if you use MT5 versus MT4. I would just download both of them on your phone or your tablet or whatever, and go about it that way. Okay. My advice to you guys is create an account. A low leverage account, 1 to 100, 1 to 200. Put $200, $300, $400, $500 on your trading account in a demo, and then trade it. Don't worry about the lot sizes and all that stuff. Don't worry about making $10,000 in a trade. The skill set is if you can take that low account and build that account, into the thousands, and that will be your key to maybe I'm ready to take a challenge, or I'm ready to put some real money into the market. Do not be in a rush to put your money in the market, because the market will take your money. It took my money, like $60,000 worth. So don't be me. I'm here to bridge the gap between the new trader and somebody with a little bit more experience. Okay. So you don't need to put any real money. You need to focus on the execution of what you're supposed to do. Okay. Another thing, guys, another thing. Unless you are walking into a position, and I'll explain that. You saw I had 4 trades open. Those 4 trades, for all intents and purposes, count as one position for me, right? You can walk into a position, which means you can enter and allow the trade to go a little bit. then enter a little bit more, allow it to push. There are different reasons that traders trade like that. I mean, you get burned enough, you'll have all kinds of superstitions and hangups, right? You can walk into a position, or you can put half on a position here and then half there, and I'll give you some scenarios as we get into the charts later on. But what I'm trying to explain to you is you don't need a bunch of trades. A bunch of trades is going to end up losing more than it is winning. The more trades you take, the more risk that you're putting yourself, you're exposing yourself to. And traders don't make money by exposing themselves to risk. Traders make money by reducing the risk. Okay. So I'm going to show you as we go exactly what I'm talking about, and I'm going to prove it to you as the weeks and the months go by, and you watch these various videos. I'm going to show you, and I'm going to show you detailed examples of how you can make an absolute killing and just trade once a month, or you can make an absolute killing and trade twice a month, or 3 or 4 times a month. So some traders, and probably all of us, when we first start trading, we spend 15 hours sitting in front of the charts, watching them, trying to catch a move, right? It's not supposed to be like that. That just means you don't know what you're doing. And it's okay. We've all been there. But again, I'm here to try to bridge that gap for you. Okay. So we talked about the MT4. We talked about the types of orders as far as limit and market orders. We talked about stop orders. Let's talk about long versus short. All right. You'll hear people say, I'm going long, I'm going short. All right. Long means I'm buying. Short means I'm selling. Okay. So you're either long or you're short, right? So don't get alarmed if you hear somebody talk about long or short, right? You get in the ForEx chat room or any investment chat room, and people say long or short. Okay, they're either long on the dollar or they're short on the dollar. They long on the yen, short on the yen, long on the loonie. It's all just regular terminology. Okay. All right. With everything that we've talked about thus far, all right, it's been 2.5 videos. Your question is, okay, all of this is great, but how the heck do I make money, right? How do I turn the stuff that you're rambling about, Mr. Todd, into some change? All right. Let me see if I can answer that for you, help answer this. All right, this is a chart that I have pulled up, and this is a trade that you saw on my MT4, right? I took this trade for you guys, but it is a real life situation, okay? As you can see on my chart, I have my position tool, right? I went over here. This application is called TradingView, tradingview.com. I went over here. I put my short position because I saw that this market was going to sell. I entered the trade here, and I'm selling the trade down to here, which it's not going to finish because, again, I'm not leaving this trade in. I generally don't trade for the short term. I'm more of a swing trader. And the JPYs are going to be selling shortly. Either they're going to sell this coming week or they will sell the 1st of June. Either way, I'm going to make a killing. So I don't have anything to do but wait on it. This was a retracement sale on the 5-minute chart, guys. So I'm not a 5-minute chart seller or a 5-minute chart trader. I just did this so I can show you guys, what I was doing. But the way you make money is you come up with your trade idea, right? We'll get into this later, but if you'll remember this, we have double tops right here, all right? This top is a little bit higher than this top, so we also have a lower high, okay? this low is higher than this low. So we have a higher high, then we have a lower high and a lower low, which tells me that this market is going to push down, right? It might push, it might seesaw, but the market is going to push down. And that's why I entered the trade for the sale. And of course, I got a beautiful candle while you guys are on here. And, it just made me look good, which is awesome. But that's exactly how you make money in the Forex market, okay? There are strategies that you can put together. Again, you don't want to overtrade. I would not recommend to anybody that they just, hey, jump in and look on a 5-minute chart for a move and, hey, I'm going to sell this because it has a lower high and made a lower low. That's not a great way to make a living. But we will definitely discuss strategy, as we move on. Okay, that's about enough for this video. In the next video, I plan on covering leverage, the relationship between, the relationship between leverage and margin. And maybe I'll just talk about it now. I might as well finish this up. Okay, so we talked about our balance versus equity. We talked about the floating profit or the floating loss. That was that blue number in the middle. Okay, I was floating in profit, right? So my equity was higher than my balance, right? When you select a broker, it's gonna come with what they call leverage, right? Some brokers offer 1 to 500, some offer 1 to 1,000, right? Other brokers are low, 1 to 30, 1 to 50. Okay, leverage is something that allows you to borrow money from your broker to take on a larger position size. Okay, so I knew this was going to sell, so I could have maxed out my position size. I could have got a huge position size because I know it's going to sell, right? And you make more money because you borrow money from them. Not literally, they don't send it to you, but they allow you to take a bigger position and they back your position, and you make more money. All right, that's a great thing. But it works both ways. You also lose a bigger amount of money when the position goes against you. And if you had lower leverage, you wouldn't have lost as much money. This is why every trading coach or mentor or whatever, they would implore you that as a beginner, get an account with very low leverage, right? Very low leverage, right? So first you're going to be in a demo, right? Demos, you're not exposing your own capital, so you're safe, okay? Still trade the demo like you would trade real money. But when you find success on a demo and you go into a real trading situation, you want to trade the real account with low leverage. Okay, you want to do that because it's only going to benefit you, right? It's going to preserve your capital. And what I mean is, when you come upon that string of losses that every trader comes across, you're not going to lose all of your money. You won't lose 60K, right? Maybe you'll lose, a fraction of your money, but you're going to lose. I mean, that's how it works. Just understand that if you use a lower leveraged account, you will be a more successful trader in the long run. Okay, once you learn how to trade, it's very easy to recover from a loss. Okay, you just have to give yourself a chance, right? And what I mean by a chance is you want to minimize the amount of money that you lose, right? Or the number of trades that you lose. And then when you start winning trades, you can creep your position sizes up, okay? Margin. All right, the more position size you put on, the less margin you have. Margin means it's basically the difference between what you what your position size is and what your broker requires you to have as far as cash on the side. Okay. Most brokers will require you to have a certain percentage of the position size. So if you take on a, I don't know, if you take on a big position size, you're gonna still need money on the side, right? And that number, you'll see free margin. That free margin will go lower and lower until it gets to zero. Once it gets to zero, you have no margin left. Okay. When you check that MT4 screen and you look up there, it's going to have margin and free margin. Margin is the amount of margin that you're using, and free margin is the number. Once that free margin gets to zero, you can't add any more positions. And the positions you're in, if they go against you, you're going to get what we call margin call, right? The broker is going to come in and cut all your positions off. And chances are, if you get margin call, your account balance is going to be around zero or very little, okay? So you want to avoid over leveraging, right? Over leveraging, using too much leverage, using too big of a position size, because it forces you into margin call if the trade goes against you. And for you guys who want to know, like, I guess, more detailed description of what margin is, go to YouTube, put in margin, and it's people that will explain it to you to the nth degree. All right. I'm just giving you a overview or a layman's version of what that actually means. Okay. They have all kinds of tools out there to prevent you from being margin called, right? The position size calculator. I'm going to give you a formula as well later on. But if you type in position size calculator in Google, this page will come up and it gives you the ability to get some assistance. Whatever currency pair you're trading, of course, my account is in USD. This gives the account size, like if you have a 5K account, a $500 account, what you want to risk. If you're risking 2%, I'll just say 1%. On a 5K account, if I'm trading Euro USD and I have a 30 pip stop loss, this will give me, when I hit calculate, this will give me the position size I need to use. I need to use 0.17 lots, right? And if I lose, if it hits my stop loss, I'm going to lose $50. Okay. That's this tool. If you use this tool, this tool is going to take you a long way, right? It'll help you, it help prevent you from losing more than you want to lose, okay? And all I can tell you, or what I can try to get you to understand, is it's more important to understand how much you're losing than it is to understand how much you're going to win, right? I mean, you should know both, but it is more important to understand what you're going to lose than it is for you to understand what you're going to win. Okay. So if this thing goes 30 pips, for every 30 pips that it goes, you're going to make $50. So if it goes 90 pips, you're going to make $150, right? All right. I don't want to inundate you with a bunch of information that you're going to forget, but we covered a lot. We covered balance and equity, floating profit, long versus short, the types of orders, leverage, margin call, stop out. Stop out is when you get margin call or if it hits your stop loss, right? The next iteration, we'll talk about some other things, okay? I guess one more thing I need to talk about is if you hold a trade over the weekend, or if you hold a trade past the New York session and it goes into the next trading session, you're going to pay a swap fee. right? Swap means they have to take your account from today's board and put it on tomorrow's board. Nobody really physically does it, but they charge you the fee anyway. Check with your broker. Each individual broker has swap fees, right? You're going to pay to hold a position, whether it's winning or it's losing. You know, most of the time, if it's winning, you're going to pay a little bit more though. But just check with your broker. Understand all the fees that you have to pay. There's also commission fees where brokers are going to charge you a fee per lot. You know, some of them are $5 per lot, some of them are $7 per lot. So this is another reason why the traders who trade less get paid more, right? Just something to think about, as you go forward as a trader. But appreciate you for hanging out. We'll be back with another video soon. You guys have a good weekend, and we wish you great success in these Forex streets.